Welcome to Helping You Thrive with Banterra Bank, a podcast that offers inspiration and information to help individuals, businesses, and communities to thrive. I'm Jennifer Spence, Director of Marketing for Banterra Bank, and I'm one of your co-hosts.
And I'm Ben Kraft, Commercial Officer at Banterra Bank and also a co-host. We've taken our podcast on the road, and we are recording this from our Banterra location in Cape Girardeau, Missouri. This episode is going to focus on our mortgage products, and in particular, our affordable home ownership program that offers both a savings component for customers who want to buy their first home, as well as several lending options. I'm pretty excited about this one because I know that program includes some new product offerings.
It does, and I'm excited about it too because, I see so many people that are renting apartments or houses just because that down payment is such a struggle to come up with sometimes. So I know our expert here is going to tell us all about it and how Banterra can help them with that. So our guest today is Eli Bowen, Residential Lending Regional Sales Manager for Banterra. Thanks for joining us today, Eli.
Thank you. Very happy to be here. I've long wanted to be part of the Banterra Bank podcast. So
oh, wow. Well, good.
Awesome. Yeah. Awesome. Glad to have you. But before we get into all the nuts and bolts of the mortgage world, we like to start our podcast by learning a little bit about our guests. So, Eli, let's learn about you. Can you tell us a little bit about yourself and then maybe your position at Banterra and how you came to be here?
Sure. Yeah. So I'm from Central Illinois. I was born and raised there. I moved to Cape probably about 10 years ago at this point. Came here to go to Southeast Missouri State University, graduated from there, and married my wife. And we have two boys, and we love Cape, and we decided to stick around.
I didn't know you went to SEMO.
Yeah.
What was your major?
Corporate communication and management.
Oh, yeah. Well, we need to help you, get your help on something.
I don't know. A little rusty, but yeah. So went to SEMO, never left. As far as how I landed at Banterra, so I've been in the mortgage business basically my entire career. I graduated from SEMO and I worked for a local bank here as a loan officer's assistant during the kind of big refinance boom of the 2019, 2020, 2021 days, and that was a lot of fun. And then I went to a real estate company that was it was kind of a real estate cash offer service that also had a mortgage division to it, and so I kind of helped to spin up the mortgage department at that company and was a loan officer and a sales manager there, just like I am here, which was a lot of fun. But I really missed the local lending, the local banking aspect of my job that I was not getting at that prior company, and so that's kind of how I got on the hunt, and then ended up landing here at Banterra. So
well, I know we're glad to have you. You've done a great job, and really appreciate what you've done for our mortgage department or residential lending department.
Sure.
Yeah. So I think most customers just know they need a mortgage, and they may not realize all the different types of mortgages. So you want to talk about what we offer, and then go into a deeper dive of those details? Yeah,
absolutely. So the bulk of clients are going to land in like really a handful of different mortgage products. The biggest one that tends to be the most cost effective and is the easiest in a lot of ways to get done is a conventional mortgage loan. That's where we want a lot of clients to be because it's going to be the most cost effective. It's going to have the least amount of fees associated with it, and there's a number of benefits to it. And then there's also a number of different government loan programs that a lot of buyers, and especially first-time buyers, get put in. So those are FHA mortgage loans, USDA mortgage loans, and VA loans for eligible veterans, obviously. Those products have a lot more flexibility on things like credit scores, things like down payments. So with an FHA, you're going to have a 3.5% down payment. With the USDA, you'll have no money down. And so there's a lot of benefits to those products as well. And, the lion's share of your clients are going to end up in one of those couple of mortgage products. So, and we offer all those here. That's a full suite that we have.
I think one of the most common questions, especially for a first-time home buyer, is about the down payment. Mm-hmm. And It sounds like depending on the type of down payment they may or may not be able to bring to the table, we can take that information and fit them into the most appropriate product for them, right?
Sure.
So can you walk us through a little bit of what it's like for a first-time home buyer, what some of the most common questions are, and how you might guide them through that process?
Sure. Yeah, and I'm sure we'll get into that with the home savings account too. But I tell every client pretty much the same thing, which is we're going to take your mortgage application and we're going to look at three primary things. And we need to figure out, based on those three primary things, what loan product you're going to go into. Or if you're not going to go into a loan product today, what do we need to do to take care of that and to get you where you want to be? And so the three primary things we're going to look at with a pre-qualification verification is credit, income, and assets. So we're going to pull credit. We're going to look at credit scores. We're going to look at existing debts. We're going to look at debt ratios. We're going to figure out, based on your credit and based on your existing debt, what loan product is best suited for you. We'll look at income. So we'll look at what is their employment history like? Are they self-employed? If they are self-employed, what do their tax returns look like? And so we're basically going to calculate their income. We're going to look at their cash flow. We're going to compare it with their existing debts, and we're going to figure out, based on their income, if they can qualify, or what product they need to go in. And then assets.
Sorry, Eli, to interrupt you. That's one thing that a first-time home buyer or any home buyer mortgage applicant can expect to bring to the table is they're going to have to provide documentation of some kind of that income. Correct?
Yeah, absolutely. Yeah. So typically before we pre-qualify anybody, we're at least seeing W-2s and pay stubs, and we're doing kind of an analysis of their income to determine that it's usable and it's where it needs to be, and if it's not, what steps can we kind of take to improve upon that and to get them somewhere they need to be. So, and then assets being the last one, and that's always the one that, like you said, that tends to be in a lot of ways the biggest challenge for a lot of folks is, Jennifer, like you said, there's a lot of folks that are renting. There's a lot of folks that are renting at monthly payments that are comparable to what they would have in a mortgage.
Or higher sometimes.
Yeah, or higher. And so, they can make the payment, but it's kind of putting that down payment together to get into that home. And that's part of why, we have our, which we'll get into this, we have our Banterra Bank Affordable Seconds, which is a no money down conventional loan product that we've been really excited to roll out and kind of get to the market. And then USDA loans. For much of our footprint, USDA loans are eligible products, especially in Southern Illinois. And those are no money down products as well.
In the USDA, is that based more on where the house is located versus the buyer?
Yeah. So it's a market eligibility thing. So like here in Missouri, Cape Girardeau and Jackson are not USDA eligible. But if you want to go down to Scott City, if you want to go to Sykeston, if you want to go to Marble Hill or wherever, those are all USDA eligible areas. And Southern Illinois is pretty much the entirety of it is eligible for USDA.
So I think Ben's question of the process is a nice transition for our affordable home ownership program. And I think listeners should be encouraged. Some may think we're not ready to buy a home or whatever, but you don't mind people coming in saying, I just want to learn about it. I want to know how I should save, which ties into our new product, the home savings account. You want to speak to that product?
Yeah, absolutely. So I always say that the best time to talk is when you're probably 12 months out, 6 to 12 months out, because it gives us time to game plan. It gives us time to figure out what we need to have in place to get them where they want to be.
But the home savings account is a savings for 12 months.
Yeah,
so at least 12 months.
Yeah. So with the home savings account in particular, with that product, and that was a idea from our career track program, and it's a really great idea. And so what that effectively does is it's a savings account. It allows them kind of that 12 months of consecutive savings. Once they get through their 12 months of consecutive savings, they're going to have that $500 closing cost credit that they can get through a mortgage at Banterra Bank. And during that 12 months, during the time that they're actually putting money into that savings account, they're getting consistent counseling from myself or from one of our loan officers here. And so typically, someone comes into the branch, they say, hey, I need to get a savings account open to start saving for a home. And what do we need to do? Home savings account, connection with one of our loan officers. And that gives them not only, a dedicated account to put that money in and to get to have a kind of just something that they can get a hold of and say, this is where my down payment money is and this is where it's going to go. But also a game plan with a loan officer to say, okay, you've got the savings account. If you want to buy a $150,000 house in 12 months' time, here's about how much we need to go into this every month for the next 12 months. And at the end of the 12 months, we're going to look at you to get you qualified for a mortgage. We're going to use the down payment that you've just saved, and we're going to give you a closing cost credit as a result of using that home savings account. So it kind of hits a few different birds with one stone, if that makes sense.
Well, that's great because, if someone has a down payment, that's great. It makes it easy, but not everyone has 20, 30, 40, 50 or more $1,000 just saved up, ready to rock. So if someone walks in, it's not just, okay, well, you don't have the down payment, start saving money, see you later, good luck, we'll see you when you have the down payment saved. It's actually a pathway to, okay, you don't have the down payment right now, but here's a solution for you. You get someone to guide you along the way, and not to mention there's some perks on the back end of it that can help you with closing costs and whatnot.
Yep. Yeah, exactly. Yeah. So we wanted to create space to give those folks guidance and not just say, Yeah, just go save and then come back to us when you feel like you've saved enough.
I would think that 12-month period too is a good time to go. You should also look at your credit score.
Yeah,
and
exactly.
I know we have that through Banterra Smart Choice Checking, and there's other ways customers can check their credit score. So you have those 12 months on. You probably can give some guidance. Here's some things that you can maybe do to improve your credit score. Is that an assumption? Or
Yeah, absolutely. Yeah, so that was the other thing there with getting the counseling from the loan officer is credit scores can take time, and if people are cleaning things up and getting things ready, not only does it give them the space and the tool that they need to save their down payment, but it gives them some time to work on that credit as well from someone who knows credit reports and who can kind of give some clear guidance in what they can improve on to get qualified. So
can you talk a little bit about, when we get into mortgage products, differences in the types of loans you mentioned? Some require a larger down payment, some a smaller down payment, some are fixed rate, some are variable rate, shorter terms, longer terms. Can you kind of do a little bit of comparison between all those?
Sure. Yeah. So kind of starting with like I said, kind of the most common one, conventional mortgages typically are going to be the most cost effective from a fee perspective. Typically, the down payment on those is between 3% and 5% minimum down payment, depending on income levels and things like that. But 3 to 5% is a good rule of thumb for conventional loans. Those loans are going to have PMI up to 20%. So we always, again, a lot of folks are not coming into the picture with 20% down to put.
So PMI is private mortgage insurance.
Yes, sorry, private mortgage insurance.
Folks like myself.
That's right. Yeah.
Can you elaborate? Can you explain that for the listeners who might not be familiar with that? What that is?
Sure. Yeah. So private mortgage insurance is effectively it's an additional part of your payment that you have to put in every month until you reach 20% equity. The insurance aspect is the investor insuring your mortgage loan basically in case of default. So when you see a loan with a lower down payment, it looks higher risk to an investor, and they say we're going to insure that. We're going to insure that mortgage loan.
So for the customer, they what they need to know is they're going to be paying additional money to PMI until they get to the point where they would have been if they were making a 20% down payment, basically, and then PMI goes away. Correct?
Exactly.
Okay.
Yeah. So you would have PMI up to the point that you reach 20% equity in your home, and at that point you can call your mortgage servicer and say, hey, I've reached where I need to be from an equity perspective, and you can request removal of the PMI. So, and that number can differ. It depends on your credit score, and sometimes it's a bigger amount, sometimes it's a lesser amount. So anyway, okay. And conventional mortgage loans, as of now, actually, they don't have a minimum credit score requirement, which has been a new development. But typically, you still need to be at least at a 640 before you're going to be able to qualify for them. 640, 680 is going to put you in a better spot. FHA loans, if someone is working on their credit, maybe their credit is in that 580 to 620 range. FHA loans are typically the direction that we're going to take them. Those loans are 3.5% down, so they're pretty minimal down payment requirements as well. They do have an upfront mortgage insurance premium, which is basically just an additional fee that they get charged as a result of taking an FHA loan. FHA loans are great, especially for folks that are in the journey with the credit and they're trying to improve on that. If I had a choice, I want to put someone in a conventional because that upfront mortgage insurance premium is, it's not an insignificant amount of money that they're paying to basically get that financing. And when we're looking at that for a client, we want to think what's the most cost effective way that we can get them in a home. Typically that's going to be conventional, but FHA is really great for folks that are, kind of in that 580 to 620 or maybe 580 to 640 range on their credit score. I was
just going to say, I want to talk about Home Possible loans.
Sure.
I'm sure that's what you're talking about next. And you just told me about the affordable seconds that I think is a recent.
Yes.
So
Home Possible is a conventional mortgage loan. It's a conventional loan for kind of low to moderate income borrowers. So typically for folks that are below 80% of their area median income in their county. And that's a product that's going to have typically a little bit more competitive interest rates and is going to have a little bit better PMI requirements. So it'll be a little bit cheaper from a private mortgage insurance perspective too. And that is a loan that we have and a loan that we offer. And that blends in or bleeds in with our affordable seconds product, which is our conventional down payment assistance product. So that loan, effectively, the way that it works is we do a home possible loan for 95% of the home's value, and then we do a Banterra Bank affordable second, where we put an additional 5% second lien on the property. So what you have is you have a no money down conventional loan product, and so that's kind of thinking with the home savings account and a lot of the clientele that we want to be helping with the home savings account. At the end of their 12 months of savings, the hope is, provided that they qualify from an income perspective, that we would actually be putting them in an affordable second mortgage as well, so that they can do a conventional, which is, again, most cost-effective loan type with no money down.
There's a lot to it. There's a lot to it. There's so many options.
There's a lot to it, but what I really like about it is it provides a pathway for someone, whether it's they have credit issues or they're maybe at a low to moderate income spot, maybe they don't have their down payment saved up. Even though that's the case, it's not just no, see you later, come back. It's here's a path. You're not here now, but here's a path to get there in say 12 months or so. So it's an alternative solution that allows someone to do what they want to do in the end, which is buy a house.
Yeah, absolutely. Yeah, as we've been kind of building out our products, that's always what we're thinking of is how can we help the most amount of people with this? And every single person I talk to, it's, if it can't be today, what do we need for 12 months from now or 6 months from now? What do we need to do? What kind of things do we need to put in place? And so that was kind of the spirit of the home savings account and of the affordable seconds is, if there's no path today, how can we get you there, and how can we put ourselves in position as a lender to have the most amount of products to help the most amount of people?
So for convenience, I think it's always great and sometimes often best to come to a branch and speak to a lender and that kind of thing. But we have online components where they can get pre-qualified. You want to talk about that? Yeah,
absolutely. So we have a fully online process. Again, we want to meet people where they're at. If they want to come in and fill out a paper application, they can do that. If they want to do,
available to come in between 8 and 4, 9 and 4 on Monday through Friday, right?
They're working. Exactly. So but we have online application as well, and we can send a link out via text message. They can open it on their phone and they can fill out their mortgage application. And so,
and even the perfect scenario probably is to go ahead and do that. Be ready so you're not, you can do it on your time or whatever. And that way, when you meet with the lender, you've already have that information filled out.
Yeah, exactly. So typically we're starting that process with just a consultation with the lender and saying, here's what we're going to look at. Here's what the pre-qualification process is going to look like. And now it's your turn. Here's what we need from you. We need your application. We need your pay stubs. We need your W-2s, things like that. Yeah.
Can you talk a little bit about different structures for different types of mortgages, whether it's 15, 20, 30-year fixed rate mortgage, maybe there's an adjustable rate mortgage product? Can you just kind of compare those?
Sure. Yeah. So typically the longer your term is, the higher your interest rate's going to be, right? So the bulk of what we're doing generally is 30-year fixed rate, either conventional or FHA loans. That's what most of your borrowers are going to get. It helps keep that payment affordable, but is going to come with a higher interest rate than say what you'd get with a 15 or a 20. If someone's in a position where maybe they're later in life and they are, ready to start working towards really paying that home off, or maybe they've just got a little bit more cash flow and they're interest rate sensitive, those shorter terms are always good. And again, there's 15, 20-year fixed rates, so the rate is still fixed. It's not moving around. It's not adjustable, but it's a little bit more cost effective, and it kind of bakes in their payment being higher so that they're paying off faster. We do have some portfolio adjustable rate mortgage loans as well. So we've got 7-year ARMs and 10-year ARMs, which just means that it's going to be fixed for the first 7 years or the first 10 years, and it can adjust every year after that. Typically that's a product we use more with our specialty lending products. So like we have our 0% down doctor loan, up to $1 million loan amount. And that's a loan product. Like I said, no money down. That also has no PMI. So you don't have that additional fee. So no money down, no PMI, and it's going to go into a 7-1 ARM or a 10-1 ARM, whatever they kind of decide.
Check out our podcast on doctor lending products
that
we recorded previously. Yeah,
that's right. Or for our single close custom home construction loan product as well. That's typically going to go into an ARM product. So
I'm glad you mentioned the doctor mortgage loan, because we do have so many specialized products just for physicians in healthcare, and And we just learned what a healthcare industry it is in Cape Girardeau and some of our other markets. So
Yep. Yeah, that's been a great product for Cape and for Southern Illinois and obviously out west as well.
Yeah.
So.
What else would a customer that's interested in a mortgage loan need to know? I know we've covered a lot already, but are we missing anything that you would tell someone that's interested in buying a home or applying for a mortgage? Any other just tidbits or tips that they might need to know coming in?
Yeah, I would always say start the conversations earlier than you think you need to with your lender and with your real estate agent, especially because, like you said, people say, "Oh, well, I'm 12 months away. Sorry, I'm calling you now." It's like, no, like thank you for calling me now because now we can have a plan. And, we can have a plan in place so that when we get 12 months down the road, you don't call me and then it's like, hey, we've got to wait another however long because we still need you to save or we still need to work on credit. And so I always tell folks the earlier the better when it comes to buying a home. Assembling a team around yourself of a really strong lender and of a realtor that's going to advocate for you is big as well. People, it seems like either go just to their realtor or just to their lender, and it's like, no, we need a team atmosphere here. We need two people that are going to work together to kind of get you where you want to go. So I encourage folks think about building that team around yourself to help you succeed in your home buying or home selling or whatever it might be. Just build a team that you trust, really, at the end of the day, because it's an emotional process. It's a process that is difficult. There's a lot of paperwork involved. There's a lot of different things involved, and so people, want to work with people they know, like, and trust. And if you can find a lender and a realtor that are gonna do that for you, that's what you want. So.
Yeah, don't be afraid to ask for help.
Yeah,
because there's a lot of moving parts to it.
Exactly.
Can you talk a little about just the housing market in general right now? You mentioned going through the refi boom in 2019, 2021, and what are things like? How have things changed since then?
Yeah, so anyone who bought or sold anything during the COVID era knows that the rates were excellent and that the housing market was incredibly competitive, no matter where you were. And so, we're kind of coming off the tail end of a really, really hot real estate market from 2019 to 22-ish. Some of the biggest years in real estate like ever, it felt like. And so coming off of that, we have a lot of property owners who have really low rates, who don't want to sell, don't want to move, and who can blame them, right? But what that does is it creates still a lot of competition for buyers because we don't have the supply that we would maybe like to see in listings. And so it's created a really difficult and a really competitive environment for buyers, which again is all the more reason to make sure that you have your ducks in a row with your lender and with your realtor. But it's created an environment where you really have you just need more preparation, ultimately. You need more preparation. It's more competitive than it's been in a really long time. And so it's a difficult time, really, especially for buyers. There's a lot of sellers that are really happy with their position because they have great equity in their home as properties have gone up.
Right.
But it's created a difficult position for buyers.
I've heard that supply issue in every market.
Everywhere.
Yeah, I mean, it just, it's tough.
Yeah, it is. And not only that, but, when you have a supply issue, you have a pricing issue as well.
I was going to say that, yeah. I mean.
And so not only is it just really competitive just to try to get a home, but people's buying power is being squeezed because the prices are going up so much. And when we're kind of in that double whammy where, well, historically the rates are still pretty strong, but we're in a little bit of a double whammy where the rates are kind of average or maybe a little above average, and then your prices are also high, and so it's just created a difficult environment for buyers.
It's a good point because I hear too, and I don't blame them, a lot of folks may have the money to do it right now, but they're waiting to see if the pricing goes down or the interest rates down. Like how long do you wait and also contribute to rent?
Sure.
I mean, anything on the horizon that
I wish I knew.
Yeah.
I wish I knew. Yeah, so I mean it's kind of like the plant a tree thing, right? The best time to plant a tree was 20 years ago and the second best time is today. And so I tell a lot of buyers that there's no indication that the real estate values are falling. And historically they fall very rarely. You see a handful of years where you've had modest decreases, but not typical. The rates are what they are. Historically, they're actually a little below average at the moment.
Well, yeah, you look at rates during the 2020-21 time, a lot of people maybe got rates, say, in the twos.
Yeah, crazy.
And they see rates now in, 5, 6, 7% ballpark.
Yeah.
And they think that's Oh, when you're comparing that
They say that's
relative
bad.
to twos,
That's
that's high.
about
But
right.
you could look back in, historically, like you said, maybe the 80s, they were there
yeah.
were times where they were way higher.
Yeah. So I mean, our rates are not bad at the moment, and so what I tell folks is you might not like the rate, and you might not even like the price of the home, but at the end of the day, you're making a long-term investment, not only in your financial future, but in the stability of your family and stabilizing your monthly housing payments. Because if you rent, you're probably going to rent for higher next year and the year after, and so there's a multifaceted aspect to the investment of buying a home. And just because you may not like the rate today, or just because the sale price might be 5 or 10% higher than it was, or than you would maybe want to spend, thinking about the long-term impacts of home ownership, thinking
15
about
to 30 year.
Yeah. Think about it 10 years, 15 years, 20 years or more down the road, and what that purchase and what that asset can do for you. Not only, like I said, not only financially, but just the benefit of housing stability. And I think it still makes a lot of sense for a lot of buyers. But at the end of the day, for buyers, it's their decision. And that's what I always tell them too. No one can make this decision for you. You can crunch these numbers a million different ways. But this is your decision to make. And if you're ready to do it, if you're ready to make the investment, like I said, it might not look exactly how you want it to look. But it can still be good for you, and historically it's great for people to own homes financially and emotionally and everything else. So
For someone that like me that loves renovation, or at least I did in my more energetic times, I think we probably should mention too that we have home renovation loan and home equity line of credits and those kind of things. And so not only that whole point of investing in a home, but you actually can make it better and make it a stronger investment.
Yeah, absolutely. And that's something you've seen a lot too, is people have said, well, we want to move, but we have all this equity and we have this great rate, so we're going to get a home equity line of credit, or we're going to get a second lien, equity loan. And so you do see that a lot, and that's something that we offer, and folks can take that equity that they've gained the last 5 or 10 years, and if they don't want to move, if they don't want to lose their interest rate on their first mortgage, they can pull some equity out, redo their kitchen or their bathrooms, or do an addition or whatever it might be to make that home a little more suitable for them.
Or if you want to buy a home, but it's not exactly your dream home or what you wanted,
exactly.
Have a little vision, and
Yep.
we'll help you get there.
Yeah, exactly. Yeah, so there's all kinds of ways you can use that equity to improve that home, improve that situation. So,
All right, Eli. Well, you've sold me. I think you've qualified yourself. If I ever need a mortgage, I know who I'm gonna call, or I know who I'll refer people to. Yeah. Well done. Thank you for all the information, but I'm not gonna let you off the hook just yet.
Sure.
We always wrap up the podcast to learn a little bit more about you. We always ask our guests what you're into right now. That could be a book, a movie, a podcast, a show. What are you interested in right now? What is something that the audience may not know about you?
Sure. Well, I feel like I'm sitting next. Ben is my book buddy. Ben recommends me all kinds of books.
We have
Like
sort of I'd say an informal book club.
Yeah,
right?
informal book club. And so I've been on a little bit of a World War II book kick, history book.
I am so into World War II historical fiction. I feel a little bit lost in it sometimes.
We got some books for you.
Yeah, we got books.
That's
What are
another
you reading right
podcast,
now,
isn't
then?
it?
Now I'm reading Gales of November, which is about the sinking of the Edmund Fitzgerald, which was a recommendation from Ben.
I need to put this in my Goodreads.
But I just finished up a couple different World War II books, so I'll probably be back on the
Beneath the
World War II
Scarlet Sky. Have you guys read that? Oh, it's amazing. Yeah, and the audio book is even better.
Okay.
We'll put it on our list.
Yeah, I'll give it a read.
knew?
So.
See?
Yeah, so we got. I do enjoy reading, and Ben and Shane give me lots of recommendations and help me get more in my repertoire.
Maybe we do need a Banterra book club.
Yeah, it's not a bad idea.
We're onto something here.
Marketing department.
Yeah.
Outside of that, I mean, I enjoy running. I do enjoy that. Not super good at it, but I do it. And I like playing board games with my friends. I like spending time with my boys, and so
that's awesome.
We spend as much time outside. My son got a big boy bike for Christmas.
Oh, I bet that was fun.
Nice.
So we are, he like makes me go outside when it's like 40 degrees, and he wants to ride his bike. And so if I'm not doing mortgage loans or reading, or I'm probably with them, probably outside and playing games.
That sounds healthy.
Yeah.
Perspective.
Yeah.
Awesome.
So.
Well, thanks for joining us, Eli. Appreciate the time. That was great.
Awesome. Thank you, guys.
Listeners, don't forget to subscribe to Helping You Thrive on your favorite podcast platform or watch the videos on Banterra's YouTube channel. You can support the podcast by sharing on social media or posting a review. Follow Banterra Bank social media for all the latest news and promotions of Banterra and our communities. Our podcast today was recorded at our Banterra branch located in the Banterra Center in Cape Girardeau, Missouri, and produced by Union Street Arts and Banterra's marketing department. You can find more information on Banterra at our website, banterra.bank. Thanks for joining us today. Banterra Bank, member FDIC.